Hello and welcome to the Core Invest series of Low Capital Investment.
And with low capital, how can we invest into the different stock type, the size and the quantity? And we are going to share with you the law of large numbers on how to make success inevitable. And that is where the secret that the law of large number, and which is not the law of large capital. It means that doesn't mean that you need a lot of money to invest. You just need to know what to do, and in large numbers, how can we be successful?
So Jeremy, more important to do more trades than to put in more money, right?
Yes, correct. So if that's the case, low capital, we can also make money. Doesn't mean that we need a lot of money, right?
And especially when we are starting, it's good to be more prudent and start with small money rather than big money, and that is a safer way. A quick introduction of myself. I'm Wai Min, and I've been in the corporate world, in the healthcare industry for the last 28 years. And 3.5 years ago, I went in to start up my consulting company, and I have more time to do investing. And for the last 3.5 years, I've been in active trading as my full-time job. And I've been teaching stocks and options together with Jeremy as well.
Yeah. And for myself, Jeremy over here, I've been investing for more than 10 years. And I've been in the hedge fund, compliance and administration, and that is where I can share a lot of my experience with regards to investing in the stock market.
Good. As a quick disclaimer here is that whatever we are sharing here are based on our speaker's personal capacity. They are not in any form a recommendation, merely for our education and entertainment purposes. Please always do your due diligence whenever you do any form of investments. And as you know, past performance does never guarantee the future outcome. Okay, material here are copyrighted. Please do not circulate, spread, or to duplicate them.
Right. So we are going to cover 7 points. Number 1, the best practices. Number 2, the stock type, the stock size, the quantity. How do we diversify into a very good portfolio? And what is the secret, which is the law of large numbers? And at the end, what can we do about it?
So we always like to start with best practices. And the first one is always important for us to make sure that we select the right kind of stock. And they have to be fundamentally strong companies, because only fundamentally strong companies will be long lasting. And of course, whatever we do, we have to make sure that they are affordable. Affordable capital and risk. It means that please do not leverage, please do not borrow money to invest. Always invest on what we can afford to lose, okay, as a form of security. And of course, we need to check our risk profile. That goes on to say that choosing the right type of stocks, and of course, diversifying our portfolio is always a very important thing to ensure we are managing our risk. We want to, as we also say, that it's better to trade with small size rather than big trade, and trade as many trades as possible, and that will help normalize our probability. We'll go into these a little bit more detail as we go on. This is the first set of 5 best practices. There are more to come.
So, as what Wai Min have shared with you, to find the fundamental strong companies, and that is where what kind of stock should we choose, right? What kind of stock type? And that is where we want to choose those strong companies from preferred sectors. And that is where you get to know there are many different kinds. There are more than 10 sectors in the industry, and you want to base on which environment, which kind of phrase, and that is where you want to understand that different phrases have different preference for sectors that can grow better within that current situation. So you want to look at that at what kind is better for you, and that is where you also want to look at large cap companies, right? Preferably more than 20 billion, because these companies, they are big, right? They are unlikely to go bust, and they are more resilient, and they have resources to grow. And that is where at the bottom left-hand corner, you can see that there are many different kinds of stock profile that you can see. Defensive stock, income stocks, blue chips, cyclical, and also growth stocks. So depend on each different kind of stocks. They are all in different sectors as well. So choose the best one out. And choosing the best one means that say for example, if you think that now during this COVID-19 pandemic itself, you can see that pharma is something that is better, right? Which is healthcare. If healthcare sector is the best, which are the best in the healthcare sector, right? So you want to choose the best one, and that is where they are more competitively stronger, right? So if that's the case, you choose that company, but we also want to know how much does it cost, and that is where you want to see how much can you invest and afford to hold it, right? What I mean by afford to hold means that this company, they are good enough for you to hold for a longer period of time without you losing your confidence and selling it away. And last of all, we have to share with you that there are tools that you can leverage to assist your research and selection, right? If you want to find strong companies, don't do it by yourself looking at so many annual reports. You leverage on tools, and I'm going to share with you what kind of tools are good for you, right?
Mostly, Jeremy, when we do analysis, it usually takes a long time.
Yes, it is.
We spend a lot of time to do research on companies to finding the right stocks.
Correct. And that is, if you really want to look into it, you can spend days and months to look into it. But how many people have the time and the effort to do it? Right? So that's why it's always good to leverage on tools that is already available to you remotely anywhere online. And the first tool I'd like to share with you is MarketWatch. This is a very nice app and also website that you can use, MarketWatch, to go and read up all the different kind of news. As what I mentioned to you about the COVID-19 and the vaccine, the healthcare sector, Pfizer is something that you want to, that you can read up about it, right? And that is where you can read up a lot of very good news with regards to the macro and micro of the economy itself, right? So that is one of them that you can use. The next tool that you can use is actually FinViz, right? So FinViz shows a very good feature of the heat map of the whole US economy itself. And that is where you can see which are growing and which are not, and which are doing well, which are not doing well. So FinViz is a very good place for you to do your research as well. And the next one will be the Guru Focus, right? So Guru Focus is really depends on you whether you have a favorite guru, example like Warren Buffett, Ray Dalio, Joel Greenberg, and so forth. And these are the people who also shares very good knowledge with regards to investing safely in the stock market. And that is where you want to research about these gurus. They are all there. And the last tool that I would like to emphasize, and you can use it at any point of time, is in the website, which is Legend of Investing. Why Legends? Is because we leverage on different gurus to come up with a methodology that can help to algo rank companies according to how strong they are. And this is very important because if you do not have time, you want something that can give you very, really good, fast result, this is the app to use it. And that is where you can search your large caps, you can search for your different sectors, and then do a quick research on it. Less than 15 minutes, you'll be able to understand what kind of company it is, how strong it is, and also the description of it. All right, so do look out for this, and there are 4 QR codes below. All right, so you can scan all the QR codes, and they will lead you to the actual website or app itself.
Okay, let's move on to one of the most well-diversified guru here. And to diversify, of course, is very important so that we do not put, as we all say, put all the eggs into one basket. And Ray Dalio is one of the most diversified portfolio, and he calls it the all-weather portfolio. And a bit of facts about him is that his net worth is about $17 billion, and he founded the Bridgewater Associate in 1975. AUM for that up to now is about $140 billion, and for the past 20 years performance, it has been very consistent. 20 years, 25% growth, comparing to SPY or SPX 20 years of growth of less than 10% growth. SPX, of course, last year grew 28%. It was a fantastic year for most companies, but consistently, it is a 25% Bridgewater Associate versus the market of less than 10%. So if we were to zoom into Ray Dalio's portfolio, by and large, he has got these 5 groups over here. As you can see, he has got about the long-term US gold long-term US bonds of about 40%. That is his biggest portfolio, so that it is a very stable long-term bonds over there. Then he has the intermediate US bonds of about 15%. So all in all, 55% of bonds. Then he has others like gold, 7%, and the commodities other than gold, 8%. So total commodity, 15%, and the rest are 30% in stocks. And if you were to study a little bit more about how he diversified these portfolio, by and large, again, he divides them into two axes. You can see the horizontal, which is acceleration of economic growth, from slow growth to accelerated fast growth on the right side. Then he divided into the second grid, which is the inflation, high inflation and low inflation. So where are we now? We are actually now with a pandemic. We are moving from the sort of like the bottom right sector going into the bottom left, going into this area of slowing growth, which is actually negative growth now, and low inflation of very controlled inflation of 0.25% growth in the US. So this is where we should now start to look into a portfolio of building up the long-term, long duration treasuries. For example, the TLT, which is a 20 years treasuries bond, and also build up our portfolio of gold, which is a safe haven. So diversifying into this area would help us stabilize the market. The market today is all-time high, right? After pandemic of about half a year of downward trend, it is fully recovered. And now with the new area of potentially slowing down, this is where we should look into that. And from there, it will build up into adding on things like inflation protected bond. This is where inflation starts to go up. Example of these inflation protected bonds are, for example, the TIPS, the Treasury Inflation Protected Bonds. And in the ticker symbol, for example, the STIP, this is a spider tips of ETF. Okay, so then ETF of bonds there. And as the acceleration starts to grow, while inflation is still there, people will start to go into more emerging equities and also real estates. And this is where it is a good area to go into a growing real estate prices. And finally, when the cycle goes into acceleration, of course, slowing down in inflation, and that's where people will go into the corporate bonds over here. So this is to show the cycle movement of market and how we diversify into the various portfolio across. And you can see right in the middle, the green spot there, cash, is that always preserve some form of cash to allow you to take opportunities, okay? And of course, you can see that doing stocks to diversify, actually, we need a lot of capital. And as capital grows, diversification becomes more important. And how do we divide? By and large, again, it is more into 25% equal in all these groups.
And talking about diversification, right, we also need to know what kind of size that we want to enter. Because we want to diversify, we must allocate correctly. So ideally, we are looking at about 2 to 5% size per position. All right. So absolutely, I mean, do not do more than 10%, so that you can get more than one to at least more than 5 different kind of company stocks, you know, or bonds or series of different asset classes in your portfolio. So say, for example, your capital is $10,000, 5% means that you're going to allocate $500. If your capital is $5,000, you're looking at 5%, which is $250. Right. So with that in mind, we want to see how are we going to use this $500 and $250, right? And that will come to what kind of quantity that we can enter. So once you have already selected those strong companies and then you are ready to invest, right? And really depends on your capital size, as we mentioned earlier, we'll allocate that portion and divide by the market price. So say, for example, if your capital is 10K, 5% allocation is $500. If the stock price of company X, right, is $2, right? So you are looking to buy this very strong company X at $2. At 5% allocation, you are looking to buy about 250 shares. And that's all for your first position, right? And you also found that stock Y is really good and the market price is $10. Therefore, with $500, you can only buy 50 shares, right? And of course, the last one, which is stock Z, which is you find that is really great, right? Market price at $50, you can only buy 10 shares. Okay, so please do take note that in US itself, you can buy minimally one share and up onwards to as many as you want. But in countries like Singapore, Malaysia, there's a minimum of 100 shares. So do take note that because of the minimum 100 shares, you want to diversify, and probably stock X is the only kind of type of stocks that you want to look at. They are generally strong, right? And then the market price is still not that expensive, right? At $2. Yeah.
And as the most generally accepted in terms of position sizing is between 2% to 5%. And in the example, we have used a 5%, right? So the lower the allocation means the more stocks you can do. For example, if you do 5%, you can do about 20 positions, right? If you have a total 100%, but a 5% allocation would allow you to have 20 different positions at various number of lots. But if you bring it down to 2%, how many positions can you do? You can do 50%. You can do 50 positions with a 2% allocation. What does this mean then? So this is where we want to share with you this secret of the law of large numbers. As an example, we flip a coin. You can only have a head or a tail. The question is, what is the probability of getting heads? If you have thrown one time, you can have one trial and you have 100% of one side. For example, the first one, head, you get a 1/1. That's a 100% strike. If you do the second flip and you get a head, and then you get a 100% again, because 2 out of 2 times you got a head. And the third one, you got a tail now, because it changes, right? Now you only get a 67%. So your probability mean will change with the number of flips. But look at it, when you do more, the more you do, the more consistent the number becomes. 0.6, 0.7, 0.6, 0.7, 0.7, 0.5, 0.5. And what is the real probability of flipping the coin? Head or tail is actually 50%, right? But it reaches 50% only, in this example, after 10 flips. So it means that, as an example, various trials have been done, and these are the different scenarios. The blue line, the green line, the black line, the red line. 4 examples here. And when you start, there is a big deviation. And as you increase the number of trials to about 100, that's where you come to a probability mean of the 50%. And that becomes more consistent as you do more. So you can see that you need like a minimum of 100 trials before you can start to get some kind of consistent results. So putting into practice, right, we find that when we do our trades, right, in the beginning, you can win, you can lose, right or not? But as you do more, as years goes by, your trades becomes more consistent because of the law of large numbers. So what is the definition of that? It basically means as the sample size becomes larger, the sample mean gets closer to the expected amount. So in practice, the more trades you do, the more trades you make, the closer the outcome reaches the expectation, depending on the probability. And in fact, in the options world, probability is already known before you actually enter that. So if we were to do a small quiz here, okay, what would be safer or more ideal? Would it be large capital? You can do more, many, or few, big or small trades. You have the flexibility with large capital. With small capital, you have got 2 choices. You can do many small trades, or you can do less of the big trades. Which is the safest? And most of us will start with a small capital, and that is being recommended there. Therefore, focus on small trades, do many small trades with small capital, so that you want to make sure that you get to the expected outcome. All right?
All right. So what do we do? What do we do?
Huh.
We do with low capital, right?
I will have to look to you then.
Yeah. So basically, with what we have shared with you, the best practices, right? What can we do? Again, leverage on the tools that we have mentioned to you, especially Legend on Investing. That is where you can do your research quick. All right, select those fundamentally strong companies. Be risk averse about it. Understand, find out more, and only do those that you know. Right. So again, invest with only those capital that you have, right? So if you have, you must always allocate some emergency funds first and pay off your expenses first. And then that is where you got more money. You can always use that money to invest. And what I mean, I've shared, right? Invest those money that you have, right? And you afford to lose, right? And then understand your risks and then diversify your portfolio so that you can reduce those risks. All right. And that is where what we want to share with you. With small capital, you can make money as well. With better and will be even better with small trade size and position. Right. And that is where many trades will normalize the probability. And one thing I want to check with you, what I mean. Okay, so if that's the case, right? What if I want to do those, very big companies? I'm now having like low capital, and I want to buy those strong companies. I only can buy one or few stocks only, and then I will not get much gains. Well, I mean, what do you think that is another thing that we can do, or any other alternative that we can do to actually using like maybe just say $5,000? How can we also invest profitably with higher returns? Maybe more than 10%, more than 20% per year. What do you think can we do?
Yeah, as we have got access to many forms of asset classes, right? And investment tools, vehicles over there. Stocks, as we all know, is that we have to have a higher capital for that. And a very good alternative to owning stocks and getting the similar kind of return or even higher with a low capital would be options. So options is a very good investment tool where you can use smaller capital for higher return. But of course, higher return always comes with higher risk. And therefore, it's very important before we do any forms of options trading, it's important to understand all the risks and how to even protect those risks or even repair those risks. And it's important to learn all these things. And when you use options versus stocks, you can also use options not just to get high return with a small capital, but also to protect and to hedge your stocks and assets. So it's a very flexible way of doing investment using options. And we can, of course, share more.
Yeah. So that is where options is, we will mention, is one of the king of investments, right? Because not only options can do on stocks, but options can do on bonds, can do on ETFs, you can do on indexes, you can do on futures and many others. And what Ray Dalio have shared, accordingly to his portfolio, he has 5 big different categories, and using options, you can also mimic the same thing using options to come up with your all-weather portfolio for yourself.
Right. So options or stocks for all weather.
Yeah. So these are the both of these links are very useful for you, right? So to share with you, we have a core hub.me/world news. If you are interested to know more about news and the core hub itself, where there are a lot of resources there to share with you on stocks and options, go ahead and scan the QR code there, and that is where we will see you over there as one of our members, right? And then if you are really interested to know about options itself, as what Wami and I have shared with you, that is where you can join our private Facebook group, right? And this is Modern Power Investor Options. This is a place where we share a lot of information of options itself. We even share about the whole basic learning of basic option for free. Okay, so do watch out on that space itself. Scan the QR code or click on the link, right? And then we'll see you there.
Okay, so it's important to bear in mind, invest smart, simple, and safe. That's the way to invest.
Yes. All right. Thank you for watching this series, and we will see you on the next one. Bye-bye.
Bye.